Good morning, everybody, and this is your S&P 500 day trade setups for today. So, been quite a few developments over the weekend, and predominantly the West piling sanctions onto Russia. One of them includes removing them from the SWIFT banking system, which could be quite detrimental to the Russian economy. And Putin responded by putting his nuclear missiles on alert. So anyway, that's why we have massive gaps in the market at the moment. I think from a technical point of view, there are a couple of things we need to pay attention to. One is we did close above this area here, which is 43.61. And then the second thing we need to pay attention to is this area that we're at right now. You can see that was a previous swing low there. We moved up, we bounced down. So oscillators is kind of all over the place. Nothing really to write home about at the moment. And weekly gap at this stage of 1,000 points, 2.7% gap down. Now, gaps like that will not stay open, that's for sure. So just pay attention to this. This is really volatile, and as I've said most of last week, you can expect it to continue. We did have what looked like sort of a breakout, and this area here was definitely looking like a breakout to me at 43.61. Oscillators have crossed over and pointing to the downside. So probably an attempt to make another low, or alternatively what you're going to find is you're going to get a higher low. So this is an area you need to be paying attention to. So from the 1 hour, you can see we've been below the moving averages all along. We broke above them, and now we've gapped back below them with a rejection of the 155. You can see how critical this 155 area is. And I'm just going to put that level in there, right there. So there's your 155 breakout. There was some structure to the left at that area. So that is another area which is fairly important. Right. So, putting all of this together, trend is still down. I'm not really keen in looking for shorts at the moment. Look at what the oscillators are doing. So by the time Europe wakes up, you're probably going to find these oscillators grouping to the downside. I suspect Europe is going to gap down as well, and probably, not really, but move a bit into the downside before stabilizing. So this area here is fairly important. And I'm just going to fine tune it onto this fractal of Friday. So that is 42.55 area. That is the critical area that we need to pay attention to. If we drop below that, then I want to see a rejection of that for another move down. And I suspect, sorry, I want that one. I suspect we'll be held up by that area there, which is 41.67. So, moral of the story, looking to see what happens right in this zone that we're in now. And I'm just going to make this chart really messy because there is quite a bit of structure here. So between 42.71 and 42.55 or 56, that's the area we want to pay attention to. We're looking for gap close. You're probably going to find us bounce off these levels. So first level is going to be 43.18, and then you'll come back and you're going to try to break through it. You'll probably hit this level here, 43.61, break through it, and then gap close. So that's kind of the play that I suspect. We need to just be careful about this and just wait and see what transpires here. So, the West is responding pretty swiftly, so you would expect the markets to stabilize, but I think the nuclear comment by Putin is probably what's spooking the markets again as well. And then also the impact on oil, because BP's also pulled out of Russia now. So there's some major developments, and I think the global oil economy is going to be changing rather rapidly. And we'll have to wait and see what happens in that scenario. But anyway, so just on the 15-minute, this is the chart you want to be playing. And you can see we have what's looking like a double bottom, but we'd obviously need to break above 43.18 for that to be validated. So I'm definitely watching what's going on in this space here. If we start breaking down below this area, you can see the two levels I've drawn in. So if we start breaking below, well, it'll be below this one, 42.55, 42.56. I want to see a break, a retest, rejection, and then more than likely a move, continuation to the downside. And 41.67 would be my next. Actually, I lied to you. That would be my next area right there, which would be 41.95. Actually, I'd round that off to 4200. So that would be the downside move. Upside move, wait for structure in this area. If you start getting some bullish structure, you can see like there, a break above that, you're looking at a 250 point stop loss. So reasonably tight stop loss, 250 point stop loss for a potential 1,000 point gain. That's kind of the view I've got at the moment. So be patient, wait for this, and see if we can start building a base here. If we can, then I would expect another move up to at least close the gap. But it's going to be wild. It's going to continue to be wild this week, so you can expect lots of volatility. And you can also expect it to turn in any which direction it wants to at the moment. It just needs one politician to sneeze, and that's what's going to transpire. So, yeah, pretty clear. Could be a big inverse head and shoulders forming at the moment, but obviously we'll need to break above this area of 43.61 for that to be validated. So pay attention, ladies and gentlemen. Pay attention to what's going on here. As soon as we've got the crossover, as soon as you get above the 155 and test it, that's when you've got potential for this reversal to be happening and moves to the upside to be expected. Anyway, that's it for me. I hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.